guys, welcome back to the Capital Mindset Show. Today's going to be just a quick little video about a sector. This is kind of going to be a discussion about what a terrible business is and a case study of an example of a terrible business. So that sector is the tankers. Okay, so those of you who've been around since at least 2020 know about the tankers, right? There was a moment in time when you had the picture in California and all the tankers were lining up. And then you had creators on YouTube going, oh, the tankers, we're buying up the tankers because the dividends, blah, 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 blah. And then you had the Nordic American tanker CEO go on CNBC talking to Jim Cramer, et cetera, et cetera, et cetera. So this hopefully should have taught you a lesson that tankers are a terrible business. That's my goal by the end of this video. And then in the future, if ever again a scenario like that occurs, people watch this video, hopefully, maybe, and they're reminded that the tankers business is terrible. You don't want to invest in that. All right, so let's begin. So the one I'm going to be focusing on is Nordic American tankers. All right, and there are a lot of creators who talked about this, right? So you actually go through some of these, and I just looked up NAT stock on YouTube. Okay, hopefully one day this video will be up towards the top, hopefully, and it'll be serving as a warning to not enter this. All right, so take a look at this. It's darkest days, oil tanker, blah, 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 up for huge. Great days lie ahead. Okay, I'm not going to mention names because I don't want to. This is not the point of this video. But yeah, still bullish. Okay, so we'll discuss a little bit about this. And by the way, this channel is a new channel, so it looks like I'm kicking it while it's down, by the way. But no. This, in the finance world, if anyone who kind of works in that knows, this industry is terrible. Okay, and we'll actually go through that so you can write a checklist, right, from here on out that can kind of help you distinguish a terrible business from something that's maybe viable. All right, so then we say, okay, keep an eye out on stock. Okay, no dividends. You see that this is a misleading thumbnail, and it's the concept or trying to give the idea that dividends are going to go up, cash flows are going to go up, 44% upside. What did I do? Not selling NAT stock, 5% ups, 5x upside. Some crazy thumbnail. Maybe I should do that. Maybe I should put 5x in my thumbnails, and then people watch more of that. All right, so you can kind of get an idea. Bulls ahead. These are different. Okay, ignore these. These are also, people also watched. Winter's coming. Okay, we're back to it. You get the picture. Okay, buying at $4.08. So let's take a look at NAT stock. And I just finished doing this video. So NAT. So NAT is the poster boy of this industry. It's one of the bigger ones. And to one of the bigger ones. And you can see here, it's actually collapsed since, well, I'm going off of that thumbnail with like about $4. It's about 70% down since that time. And then what happened was, at the time, there was a supply glut in oil. There's a ton of oil production, tons of oil trying to come into the United States, and they needed a place to store it. So these tankers actually had the best time of their lives, right? Despite all that, they're terrible businesses. Okay, and I'll go over some of the books, right? But let's actually first discuss the criteria, because the purpose of this video is not to bash on anyone, it's to try to educate, right? So how can we distinguish what a terrible business is from a good business? Okay, well, one, I would consider that where its destiny is not in its hands, right? So what do I mean by that? Well, so Apple can produce its own products, right? Apple's the pinnacle of what everyone can think of as a great business. Or let's say Google, right? Google, which is a core holding of mine. And Google has its destiny in its hands, right? It dominates the software space. It creates cloud products. It has so much money, it doesn't know what to do with half the time. All right. But something like Nordic American tankers, they have to purchase something in order to even start the business. They have to purchase the tankers, right? And that's core to their business. It's as if, for example, Google had to purchase Google, the search platform, in order to, and consistently buy new Google platforms in order to conduct business. It's as if it had to do that, right? Because Google, sure, has to buy service, but those are add-ons, right, that are supplemental to the core product. Of course, you could say the core is not available without those products, but it's not the actual aspect, which is the search and YouTube and all that, right? But Nordic American tankers, they cannot do anything without buying the ships themselves, right? So who has the power in that negotiation? Well, the producers of those ships, because without you getting those ships, you have no business. There is no NAT without purchasing those ships, right? So I hope that's kind of clear. And again, comment down below if you want me to be a little bit more clear on what I mean by that. But again, NAT, that's space. So these businesses as a whole, they're not going to make you very wealthy at all. In fact, they're going to be money pits. I mean, I think if we go down to the max, we can kind of get an idea of the longer term picture. And I don't know why people thought this time would be different. This is naturally a bad business, right? So let's take a look at, for example, some of their earnings reports. All right. So some of their financial statements, right? So this one is the consolidated statement of cash flows, and we can kind of see what the heck is going on here. So I think it starts up here, right? So this is the consolidated statements of operations. Okay, so this is actually where I wanted to start. All right, so we can see the revenues, right, are going down. Okay, because they're not necessary anymore. This was a one-time event. This is not the natural state of this business. Okay, they're doing great back then, but now we're in a different time. So they're making all this money, and now they're losing all this money. Okay. And this is on a GAAP net income basis. Now I want to go to the cash flows. Okay, so now let's go to the cash flows. Okay, I want to go to operations. So this is the one. They don't actually show us anything else, I guess, because it's pretty simple. But the operations, they're burning cash, right? They're burning cash on the operations. They can't produce any cash based on the current prices of their service. And again, their destiny is not in their hands. On top of that, when I forgot to actually even mention this, they're not even beholden to just the supply and demand of ships, right? A lot of the demand for these ships has something to do with the oil market. So on top of that, they still can't control, right? And they don't have the value, the gold, right? The liquid gold, which is oil. They don't even deal with that, right? They don't produce it. They don't mine it. They don't do anything like that. They are simply container ships. That's it. That's how worse of a business can you be in, right? So the ones who are making tons of money is the CEO, the founders, and all that, because they're making good salaries, good stock-based compensation. They're doing fine, right? They're wealthy enough. It's you as the investor who is not going to make a return on these investments, right? And then they're going to make their special dividends here and there, but trust me, they're fine either way. You're focused on putting your capital to work here and then hopefully getting some positive return, which you're probably not. Statistically, you're not going to, okay? And there has to be some sort of huge pivot away, or there has to be some massive consolidation where there's a big oil tanker monopoly at one point. Then maybe this industry is going to eke out profits, but not really. This is similar to the airlines business, where in the airlines industry, I consider that to be another example of a terrible business. Okay, so I just want to be very, very clear. Like, so for example, who holds the power in the airline industry? We go back to that same criteria. Well, the airliner cannot operate without what? Without planes, right? So who produces the planes? Well, you have Boeing, Airbus, the two big ones we've covered on the channel. They produce the planes, right? And then so you have all the airline operators competing in a cutthroat business, price competing each other out. And so you have the Boeing and Airbus, which are basically a duopoly, and they produce all the planes. So you have to go to them, right? So in that negotiation, Airbus and Boeing, they have the power, not the airliners. Airliners, bad business. Don't want to be involved in those. Okay. That's just my criteria. You can adjust this criteria to however you feel free, or you can dismiss it entirely because it's a stupid criteria. But that's kind of like my opinion, and it goes off of the philosophical understanding that Buffett's been trying to teach, which is the punch card investing. So it's the idea that you can only invest, for example, 20 stocks in your entire life, and what that's supposed to do, or the understanding of that, is it's supposed to make you very selective, right? You don't want to allow just anything into your portfolio. You want to be selective. You want to say, okay, that's a bad business. No, this is a good business. Yes, please. Right. Or that's a good business, not the right price. I'll wait. Right. So those are the things you can kind of think about. And that's what he meant by that. So Nordic American Tankers, all the tanker companies, no, get out of here. And then airlines are kind of like, they're better, but for me, they're still kind of like, no, thank you. That'll be someone else. And then we can kind of also think about sometimes the cruise liners, right? The cruise liners are even better than the airline ones because there's a little bit more branding involved, more customer loyalty, different levels of experience, right? So that's a little bit different, but I wouldn't call it like a fantastic business, right? It's better. It's a lot better. We're getting better and better and better, but it's not like, we're we're still far from the spectrum of where Google and Apple are as far as how they control their own destinies. So, but those are superior. Like we're talking like tankers are down here, man. They're down at the bottom. So this hopefully serves as a good case study. Again, just to put it out there. That's the whole purpose of this video. And hopefully if this somehow ever happens again, that these prices go up a lot, the only way that you would stand to benefit is if you somehow knew that situation was going to occur before it, then you profit and you sell into that strength. But do not hold these things for the long term, right? I'm not your financial advisor. You go do whatever you want after your own research, but I'm saying do not hold bad businesses. I can be that broad, okay? You know, it's fine to say it like that. But on that note, guys, you guys have any other questions, comment down below. This is not a conceptual video like a industry level analysis. This doesn't count for those kinds of videos. This is just a quick little tidbit that hopefully, you know, serves some value to some people out there. And I hope you guys have a great day. I'll see you guys on the next one. Bye.